Today, I'm showing a real live buy right trade on PTIR. Why it caught my attention, how I entered it, and what needs to happen next. After the trade, I'll give you a quick recap of what happened. Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. In this video, you're going to see exactly why PTIR got my attention. I'm going to show you the technical setup behind the entry, the actual buy right order, how the premium lowers my cost basis, and what I'm going to watch from here. Okay, traders and investors, today we're going to be going over a real live trade. We're doing the buy right strategy. My last video, we went over the particulars of how it works, the structure of it, and whatnot. Today, I have an opportunity to show you an actual buy right. I'm going to show you why I'm getting into it. I'm going to show you how I'm getting into it, and I'll actually show you on the brokerage how to place the trade. So without further ado, this stock here, this is an ETF. It's PTIR. It's a Granite Shares 2 long of Palantir. Now I'm doing this on PTIR here for a couple of reasons. One, it's a lot lower cost than its underlying Palantir. But the other thing is it will move 2 times the amount. So in this case, these ETFs, they trade very well. It's nothing that you want to hold on long term. They do have a tendency to lose value over time as they rebalance every day, plus there's fees. But for trading, they're incredible. So this is the ETF that I'm picking today to place this trade. So what I wanted to show you is a couple things. This is the chart. Again, you guys know that I have a bit of a busy chart. I prefer having a busy chart because I like to see all the confluences that I can before I place any type of trade like this. So we'll start down here, and this is the RSI, and anything above 50 suggests that we have a momentum to the upside and that the bulls are in charge. Okay. I also look a lot at the MACD here. This is the MACD. This is the trigger. The signal line is the blue line. And as you can see, every time the signal line crosses over, you can see like back here in February 19th, the signal line crossed over and we had a nice run in Palantir. Okay, so that's what I'm expecting now. We're having a crossover and it's expanding. We also have a bullish histogram momentum. We have also the 9 EMA is crossing over as we speak from the 21 EMA. That's also a bullish signal. Anytime you get a crossover, back here on March 3rd, we had a crossover, and again, we showed a nice gain up, and it held for quite a while until, it crossed back over here. This is where you'd, be out. But in this case, we're doing a buy right, and I'm doing a special type of buy right. I'm actually doing a buy right that is a very short term. Today is Wednesday, the 22nd of April. I'll be putting on a buy right to get out of this trade in a couple of weeks. So if everything goes to plan, we'll be collecting premium and hopefully we'll get these shares called away also. But we'll see. So what we also have here is we have the point of control, this red line. It shows the most volume traded in this time frame, which is, basically this year. Okay. So we have resistance here at the point of control. We also have the top of the Bollinger Band, which at times can show some resistance and or a place of interest, let's say. Okay, but right now we just crossed over the middle line of the Bollinger Band. We're at the 50-day moving average, and we're holding this at the moment. So what I expect, unless there's news, is that we can jump up to about 1850-ish before we might see some resistance here. So again, this trade is a fast-moving trade. It's something that you get in and you're looking to get out quickly. Now, I don't mind if I buy these shares of this stock and it goes up, but we don't get called away. Now, the idea is for these shares to be called away. But if they don't, I'm okay with that because I'll still collect premium. And so the conditions are all here on the technical chart. And we'll move on to the brokerage. So here are the brokerage. I'll come up here and I'll type the PTIR. There's the Granite shares. And in here, we're going to go to trade options. Okay. Now, actually, before I do that, I'm going to go ahead right now and I'm going to buy the shares. So in this case, I'm going to buy 100 shares. I'm just going to put on one contract for this example. So it's going to cost me about $1,723 to put on this trade. So it's just a real simple buy 100 shares. I'm going to preview this order. I'm going to go ahead and buy those 100 shares. And there we have it. Now I own 100 shares. Now I'm going to go to the options chain. Okay. I'm going to go to the option chains, and what I'm going to be doing is I'm going to be selling a call. Sell call. You don't want to buy a call here. You're selling a call. I am doing this. Now, in this case, PTIR, this is a monthly traded ETF, which means expiration is in the months. Okay? So in this particular case, I'm not going to be utilizing a traditional style of buy right because we don't have weekly options. Okay, so we're actually going to be looking out towards May 15th, about 23 days. Okay, so let's go down, and what I'm looking for is a relatively close to the money trade. So right now, PTIR is trading at $17.22. Okay. Now, that is probably right around a 50 delta or so. This is a 51 delta. This is right at the money. Okay. And what a 51 delta means essentially is for every dollar the underlying asset goes up, your option will go up about 50 cents. It also gives you the probabilities. You guys, I've talked about delta a lot in the past. So this gives me about a 50-50 probability that the price will go up to $18 by the time this expires. Okay. So because this is a buy right strategy for 15 days, I am looking to gather the premium I feel is going to best will be best for me to have this trade come on. Meaning I want a certain amount of premium and a certain amount of capital appreciation so that at the end of the day, it's going to be most beneficial to this trade. Okay, so I'm going to go back to the chart and I notice right here we have a 1850. 1850 is where I think we'll potentially get to. There's resistance here, and then there's some more resistance. This is the value area high here around $20.69. This is also would be past the Bollinger Band, although the Bollinger Band can always expand. And you also have the 200-day moving average in yellow here. So this is another point of interest for me personally, this $20 area. So because we're looking at a May 15th expiration, which is about right here. So in May 15th, can we get this price to move up to that $20? I think we can. I think that is going to be approximately where we would be. And I think that is definitely something that we could be looking at as far as a trade. So I don't want to ramble on too much, but I'm looking at right now. I'm looking at this $20 strike. Okay, it's setting probably it's a 37 delta. Okay, which means it's a 67 or 63% chance about that it will not reach this $20 strike. Now, in our case, we want it to reach this, and the idea is we'll collect 200 and say $80 if it gets up to the $20 strike price in about 23 days in capital appreciation. We're also going to get $115 from premium. So right now we're looking about a $400 trade here to put this on. Okay, so I'm going to go ahead and click this button. This brings up the ticket. I see that it's a sell call for May 15th. I'm going to go ahead and continue. I do have 100 shares available. This is Robinhood platform, and I'm going to go ahead and click this. Now here's what I see here too is I have the ticket up here. The bid and ask spread is from 115 to 125, and you all know from my videos I'm not going to be putting in 115 here. I'm going to put in 130 or 125 rather, and I don't expect this to go in because that's the ask, but I'm going to try just for the heck of it. I'm going to go ahead and put this trade on, and we'll see if this gets filled. I don't expect it to. I give it a few seconds. It didn't fill. I didn't expect it to. So now I'm going to put in another one. And in this case, it's going by increments of 5 cents. So I'm going to put in $1.20 here. Now this is a medium fill. I do expect this to actually fill here for $120 collected in premium. So let's see if this fills right away or not. And we're waiting. And right now it doesn't appear that there's going to be anybody looking to buy this contract at $100 or $1.20. So, and if you see here, the bid and ask, my $1.20 is now the ask price. Okay, that's why it's not going through. And because I want this to go through right now, I think this is a good place. I'm okay giving up this $5 to get it at $115 instead. Now this will go through automatically because there is a person here that has this out for bid. So this is going to go through immediately when I put this on. This will not be a question. It's going to go right through. And there it went. So there you have it. I now have placed a buy right strategy on PTIR. And there's my trade right there. It's a -1 call. I'm going to collect $120 or $115 in credit for this trade, plus the capital appreciation of approximately $280. So this will be a $400 trade. And this, my friends, is how you do a buy right strategy. I hope that this was informative. I hope that I did this trade justice. I hope that you understand this a little bit better. And I'll go through a little bit more detail after this live instruction after this so that you can see a few more details that we might be able to go over. So again, I appreciate you watching, and we're going to continue this video with some slides and a little bit more demonstration. Thanks for watching. So let's simplify the trade. I bought 100 shares of PTIR at $17.20. Sold the May 15th $20 call and collected $1.15 per share in premium. That brings my effective cost basis down to $16.05. And if the shares get called away at 20, the max profit on this is going to set up to be about $395. This is what makes this setup attractive. I get immediate income from the premium. My cost basis drops from $17.20 to $16.05. And the $20 strike price still gives the stock some room to move higher. So This gives me income up front, some downside cushion, and a defined plan if PTIR rallies. So from here, three basic things can happen. If PTIR moves $20, the shares are likely going to be called away. The profit comes from the stock appreciation plus the premium I already collected. If PTIR stays below $20, the call is going to expire worthless, and I may be able to sell another call later. So if PTIR drops, the premium I collected will help cushion that downside a little bit, but I still own the stock or the ETF. So the risk is still there. It can go down lower, but sometimes owning the stock after a covered call fails to be called away can be a really big capital appreciation later. So I'm okay either way. And if you enjoy real trades, practical strategy breakdowns, and income focused ideas, make sure you subscribe. And if you want to keep learning, check out my next video.